Hi, my name is James Nicholson. Mortgage rates have been slashed. This is good news for buy-to-let investors, homeowners, and it will also impact renters. So we're going to cover who has dropped their interest rates, how much they've dropped them by, and what that means for you as an investor or a property owner. Now, before we jump into this, if you could please do me a very quick favour. We're trying to get to 10,000 subscribers by Christmas. We're very close. But if you could take your finger of power, smash that subscribe button and hit the bell notification if you haven't already. I want you to subscribe. We've got so much content coming up. There is so much coming out. I've got a really good video on energy performance certificates in the next few days. And we're going to help you pick the right mortgage, 2-year or 5-year. What should you choose? So make sure you do that. And if you haven't, on all of the videos, make sure you smash the like button, guys. Tickle the like button. Just do something to the like button. Go and press that like button right there. I'll wait while you do it. That really helps us with the YouTube algorithm. We're gonna hit 150,000 views this month. Last month we did 100,000. So what growth that is insane. So what the hell is going on? Well, this is good news. Now, this is a considerable drop in interest rates. Some of you are gonna say, slashed is not the right word. It is, because I'm a buy-to-let investor and we pay interest only. So anything above 0.25% that comes off the rate is big news and makes a huge difference to us in our monthly payments. Also, it's an indication that rates are not going up at the moment, which is also good news. So it kind of gives people that bit more stability. And what I also want you to take into account, if you are investors, then what's happening at the moment is salaries have been going up. So that's going to marginally increase affordability that side. House prices have come down, which is going to help affordability from that angle. And interest rates are coming down, which is going to help affordability on that side. So there's various different angles that are slightly, marginally, not setting the world on fire, but they are improving affordability. And that's good news in my book. So what is going on? Well, the inflation data came out this week, and for a couple of weeks, we've been thinking that inflation was going to have a blip. They were talking about that in the news. And so the government were doing their rounds on Sky News and BBC News saying, look, inflation looks like we're going to have a blip in August. Oil prices have gone up. However, it didn't. So we were at 6.8 inflation. We were expected to go back up to 7.1. We dropped to 6.7. That meant that yesterday, the Bank of England was able to have a pause in interest rates, which is really good because we had 14 consecutive increases in interest rates. Now, it will be interesting to see when we get more housing data. We'll get that in a week or so, but that housing data was already decided prior to any of this happening. But it'd be interesting to see what this means for the housing market. I think that it will mean however far we do go down, it will be slightly less. So that's good news. So what lenders are basically reducing their rates and why they're doing that? First off, they're doing that because of something called the swap rate. That's where banks borrow money. So while the Bank of England base rate's important, banks borrow from other bigger banks. They do that on something called the swap rate. And that dropped with the inflation data and with the Bank of England pausing. And so they're able to get money cheaper. They're not getting as much business themselves at the moment. And so they're fighting to get the business. So let's look who's doing what. Well, NatWest, which is a pretty big lender. I have a mortgage for NatWest. They have dropped their rate by 0.31 down to, not making myself enough space here, 4.94%, sub 5%. This is good. Now, this is on a long mortgage. It's on a 10-year deal, but this will start coming through to the 5-year and the 2-year deals soon enough. So that's a positive start from NatWest. A sub 5% mortgage. Could be good for some people. Next is Nationwide. Very big lender. And some of these, you might think, well, how are they so big? They have sub-brands and ones that you may not have heard of. So 0.31% down as well. And they are also doing 4.94%. So another lender under 5%. That's really, really where we want to get to. So great news there. TSB. So TSB has gone from 0.25% down, and they've got their rate still above 5, but it's close to 5%, which is good. Let me try another marker because that's not that clear. So TSB is 0.25% down to 5.09%. Virgin Money, now this is a big lender. And so Virgin have not told us how much they've dropped, but they are sub 5% as well. This is good. This marker, however, is not good. Let me try the blue one. I've got some more markers, so I'll do some other videos with these new markers. These are going in the bin. So they're good. And one thing, just quickly, before I go into the next lender, I'm actually doing a remortgage. Started it a week ago to release some equity to get some other deals that I'm interested in at the moment. And the lender, not the broker, but the lender said, hey, look, get your application in again because we'll be able to do it at a better rate, which was great. We would have probably asked that ourselves, but it was interesting to see that the lender came to us and said, look, we've actually got better rates now, so scrub that application. And we were getting that through with the hope that they were going to hold that rate prior to any potential increases that we could have had yesterday. So that was good of them. And so I can't remember what the lender's called. Let me tell you. I've got it here. I've not heard of these guys. Vida Home Loans. Not heard of them. But sometimes I'm doing mortgages for companies I've not heard of because I just want the best rate, especially in this market. So who else has dropped their rates? Yorkshire Bank. These are a big bank. Yorkshire Building Society, isn't it? Not told us how much they've dropped, but again, 4.99% is their headline rate now. Now, this is good, like however you see this. Now, some of you are going to watch this and maybe you're glass half empty kind of person. You'll say, well, look, I could have got 1%. You could, and that's what it was, but it's not anymore. And historically, these are rates that are more normal anyway. I was looking up, I've got a filing cabinet just there, and it's got the paperwork with John Charcoal on my first mortgage on the flat that I own down the road here. And that was at 5.5% on a variable rate when I initially took that one out. And that was a normal rate. That was in 1999 that I got that property, and the deals worked. And so deals will work at these higher rates. What we need as investors, homeowners, people that rent, what we really want is predictability. And that's where we're getting to. Now, this might mean that the market might bottom out in 3 to 6 months from now. If we can be more confident that these are the interest rates and these are what they're going to stick at, and we can get another pause in November, then that's positive news. And that's really what we want as homeowners, investors and renters. We don't want the volatility that we've had. 14 consecutive increases was brutal for anybody. That was a really, really tough time, and we didn't know where that would end. We were looking at maybe 6.5%, but we've got to 5.25 now, and now the banks are able to offer us rates lower than that, which is good. And so who knows? We don't know. Inflation might start shooting off again because of oil going up, but right now it's getting a bit more predictable, and that's a good thing. So what does this mean for rents? Well, I think that this will mean that rents might level off for a little bit. I've got an important video on EPCs coming out over the weekend, so watch that because that's going to have a big impact on rents as well. So there's more stability for landlords at the moment as well, which means less of them will leave the market now. That's good for rents. And so that will make sure that rents aren't going up at the crazy rates that they have been recently as well. So all in all, I think this is not the most exciting week in the world, but this is probably the most positive week that we've had for at least 6 months, I would say, where we've got a little bit more certainty. And that's what we want as people that are doing deals in property. Let me know your thoughts on this. What do you think about these new rates? I think it's great that they're fighting over it. They're slashing the rates. I think it's really good myself that it's below 5%. You might not. You might think these are horrendous rates still. Comment below. Do like the channel. Do subscribe, hit the bell, like the video, and go and check out this video right here.